Hello, everyone, and welcome to Fast CPA and Consultant YouTube channel. We are here with our CPA full-time Aaron Sanchez, and today we're going to talk about the comprehensive guide to tax filing for the cannabis industry in the U.S. The cannabis industry in the United States faces a complex regulatory and tax environment. In this guide, we will provide up with all the necessary information to understand tax obligations, important deadlines, penalties for non-compliance, and how proper tax planning can benefit your business. Additionally, we will highlight the advantages of working with a CPA and the benefits of accounting outsourcing. Let's
Very
start.
nice. Okay.
So, Fulton, what are tax obligations in the cannabis industry?
Hello, everyone. It's a pleasure always be with you. In this interview regarding the cannabis industry, basically we have three main topics. The first one is the deadlines about tax filings. Deadline for federal taxes, deadline for state taxes, and deadline for estimated payments. In the case of federal taxes, the deadline, depending on the type of company, of the entity type that the business has chosen, is either March 15 for the IRS, this is for an LLC or an S corporation, or April 15 for a C corporation. This is with the IRS at the federal level. Um, Business owners in the cannabis industries, they need to make sure file on time with the objective of not incurring into penalties and interest that the IRS is going to assess in case you don't file on time. Regarding state taxes, states usually go with the same deadline as the IRS. So for LLC companies and S corporations, they need to file on March 15. For corporations, it goes to April 15. Regarding the estimated payments are for two types of taxpayer. First is C corporations, and second is individuals. LCs and S corporations do not have estimated payments because they do not pay taxes. LCs for with two members, and S corporations, LLCs with two members, report separately. LLCs with one member do not report separately, and they go with the tax return of the individual. LLCs with two members, LLC with one member. LLCs with two members, they do report separately. S corporations, they do report separately as well, but they do not pay taxes. A C corporation will do need to pay estimated taxes, providing that there are profits. Same thing for individuals. This is in the case of an LLC with one member that reports with the individual. That individual needs to also pay estimated taxes. Estimated taxes are payable in a quarterly basis. And the deadline is usually the 15th day of the month after the quarter. So, for example, for a year end December 31st, April 15, well, there is an extension until April 30th, but 31st will be the deadline for estimated payments. What are estimated payments? This is only if you have a profit. If you have a profit, there is the expectation that you pay quarterly payments similar or to the profit that you have in the previous year. So in the previous year, you have a profit of 100. You have to divide that into 4 and pay 25 every quarter on the 15th day of the next month after the quarter. So for a December 31st year ended, you have up to a January 31st to pay your estimated payments of taxes. This comes from C corporations and individuals with LCs of one member. They need to pay estimated payments with the objective of avoiding penalties for non-payment. The IRS is now assessing actively penalties when there are tax payments, in this case quarterly tax payments, that are not given properly or on time. There is also the penalty for no compliance, as I was explaining a little before. They are very strict. There are penalties for late filing, usually are $200 per partner per LLC. Same thing for the S corporation. There are penalties for um, late payment when even though you pay or you don't pay, the IRS is going to assess a penalty. So there are penalties for not filing or for late filing. There are penalties for not not paying or not payment, or, and also for late payment. This is the two type of penalties that the IRS assess for individual return and for mostly for individual returns. Individual returns and LLC members with one, when LLC companies with one member, they usually pay, if they don't file and they don't pay, they will have a penalty for not payment and for not filing. For LLCs and S corporations, they will have only one penalty, that is late filing. There are no payments in this type of companies, LLCs with two members and S corporations. And for C corporations, they will have the two penalties as well, for not filing and for not paying. So make sure that you have um, this filing covered and on time so you avoid this penalty.
So, Fulton, what are the benefits of tax planning in the cannabis industry?
Cannabis industry is very atypical. It's not the same as other industries. Specifically, the cannabis industry is not allowed to deduct regular, let's say, operations, regular deductions that other um, industries will be able to do. So the only thing that the IRS allows to the cannabis industry is the deduction of a cost of goods sold. Any operation after that, any expense after that will not be applicable. So there is a disadvantage compared to the other industries, where the profits from the cannabis industries are, the tax profits are larger than the profit that other industries will show. So this implies that you need to plan from the beginning. What we have seen, I mean, from the beginning, to make sure that you minimize your tax payments using the rules from the IRS. What we have seen is there are in a typical retail operations of cannabis, where, excuse me, they sell typical cannabis products and also other products not related to cannabis. They need to have two operations, because if you mix all of them in one single business, the IRS will assume that all the operation is cannabis related, and even though the other products non-cannabis related, will not be able to take the deductions for the operating expense. So if you have a retail business where there are products related to cannabis and products not related to cannabis, make sure that you have two set of transactions, two set of income and expenses, because in the cannabis related, you will not be able to take the expenses, and in the non-cannabis related, you will be able to take the expenses. So make sure you classify correctly your books when you are combining your operations. Also, the strategy is very important. What is the type of entity that you have chosen? Make sure that if you are doing anything related to cannabis, or in general to a business where there is risk, you protect yourself with a C corporation, an S corporation, or having an LLC with at least two members. That will give you full protection in the case of any risk, not any risk, not any liability that you may have. It's also very encouraged that you have insurance like any other regular business for your operation. There is also the matter of compliance. States are very strict. States that have approved the cannabis industry operating in those states, it's very important that you have um, compliance, but you check with the states and you comply with the requirements for the state in quarterly reporting. Some states do require quarterly reporting in addition to the yearly report. Remember that if you have all your retail operation, you also need to have your sales tax license in place with the objective of reporting these uh, sales taxes to the state.
So, next question. What must be to have a perfect tax compliance checklist?
Um, First thing, depending of what is the nature of the operation, if you have production and it's not combined with retail, if you have production and distribution and retail as well, where you have one integration, vertical integration, it all depends of what is the part of the industry that you are. Basically, for any type of business, regardless of the level of the industry, the cannabis sector, it will be to have a good set of books and the transactions that you have regarding the production being entered into your books correctly, and that the accounting books are closed every month and the banks are reconciled. Inventories are taken, and any expectation of compliance is given to the, let's say, to the authorized person, to the person in charge. So this reporting is comply with the state. Also, you need to be aware of the deadlines. I was explaining some deadlines. In this case, I'm going to take the example of the sales tax. Sales tax is a monthly reporting most of the times, and you need to report this up to the 20th day of the next month when you are closing. When you close in the month, you have 20 days to report. Some states, like Florida, in Texas, they give you an allowance if you report before the 20th. So you can take an advantage of that. I think that is one or 2% that they give you a discount. But you have to make sure that you have in place your accounting books. If you are in the retail side of the cannabis industry, you are selling to the public, you have your sales tax license in place, apply for, and you report the sales tax to the state on time, so you avoid penalties. You also need to, if you are working, the entity structure is either an S corporation, an LC. You also need to estimate taxes because the LCs and S corporations, when LCs with two members, they flow to the owners of the business. So if this is a profitable business and it's creating a lot profits that are going to be transferred to the owners of the business, you need to plan in advance what will be taking it. For example, taking the year before, what will be the estimated profit that you are going to have, and at the individual level to plan for quarterly payment. These are the quarterly payments we were explaining before, that they are due the 15 of each of the months after the closing of the quarter. This is if the owner owns an LC or an S corporation, and the profits of these two type of entities are, and there are profits, and these profits are transferred to the taxpayer, to the individual taxpayer, to the owners of the business, and they will have to pay taxes for those profits. So it's good that you have an idea of what are the estimated payments based on the previous years of operation, profits if you have profit, and then execute the quarterly payments that the IRS requires. And finally, you need to have detailed records of the transactions, and they should be available for inspection. If you have also employees, for example, and you need to have working compensation, the working compensation will have an audit of the payroll for the employees every year. So you need to have a good set of books. If you process your payroll yourself, that need to be detailed. They usually the working compensation auditors usually require 1 year to make sure that what you are paying for the work in workers' comp is what they estimate that it's your obligation to pay to the state, or um, and estimate and review your transaction. That's only possible when you have a set of books. If you are not running your payroll, you have to you have to make sure that these reports come from the payroll processing company. In addition to that, if you have payroll, you only need to have all these reports in place. There are quarterly reports for payroll to the IRS and to the state. There are the payroll reports, 941 reports. Those are the quarterly payments to the IRS for the Social Security and Medicare for the employees that you have. The state also requires, for example, unemployment or reemployment filings and payments. So all these obligations, tax, check in advance, or calculate what is the level of profits that you have or you expect in this year. Make sure that you have estimation for quarterly payments at the individual level, and pay those to the IRS. Sales tax, pay them on time, pay sales tax on time, report all of your payroll tax obligations on time, quarterly and annually. In the case of a quarterly will be unemployment report for the state, and also payroll tax, Social Security and Medicare for the IRS. And the IRS also has a report for unemployment taxes at the end of the year. And finally, is the audit from the working compensation company or the insurance, that they will require your records. And if you are not running your payroll, make sure that you have from your payroll company, any company that you run the payroll through, that you have the records in place. So you need to have these records in place. You need to have a good accounting system, the books of the company available, bank accounts reconcile, comply with the sales tax with the sales tax reporting every quarter, comply with the IRS for the payroll tax reporting every quarter, comply with the state for the unemployment every quarter, uh, make sure that you are doing your quarterly payments at the individual level, coming from the profits of the LLC with two members or the S corporation that are passed through entities, and also make sure that you are the records of your payroll, you have it in on hand or in digital copies, and they are available for the working compensation insurance that are going to audit your bill.
Now let's answer frequently asked questions. The first one is, what taxes are cannabis businesses subject to?
They are subject to, as I explained before, three types of taxes. Depending on the entity type, remember, it's cannabis. Depending on the entity type, if you have a corporation, C corporation, you have to pay taxes at the IRS, to the IRS, or at the IRS level, and at the state level, except for states like Delaware, Wyoming, Nevada that do not charge a state tax to companies. But for the other states, including Florida, Texas, California, you have to pay taxes to the state. This is when the C corporation is profitable. For LCs with two members and S corporations, they do not pay taxes, neither to the IRS nor to the state. They are pass-through entities. But as they are pass-through entities, the profits of these entities go to the owners. So the owners need to plan carefully, because they are going to receive the profits of the company, and they need to do quarterly payments to the IRS. This also applies to LCs with one member. They need to make sure that they do quarterly payments. How would you do quarterly payments? You take the previous year profits and you pay taxes based on that. You can ask your accountant, your CPA, your tax preparer, to give you at the end of the year. There are some like receipts from the tax return that you can use to mail your check or do payments through the IRS website, irs.com/payments, irs.gov/payments, and you can pay your taxes there. But make sure that you have the documents and you pay this on time. Otherwise, the IRS is going to assess penalties because you are not doing your quarterly payments. Remember, quarterly payments apply for C corporations and for individuals who receive profits from LLCs of one member, LLCs of two members, and S corporations. There is also the objective to avoid penalties. So it's not only that you pay or you file, you also need to pay and file on time. Because if you file but pay late, or you file late and pay late, you will have those two type of penalties for not filing on time and not paying on time. There is also penalty for not filing and not payment. Those are larger penalties that go up to 25% of the amount that is owed of the taxes to the taxes of the IRS. Please also remember the sales tax. They are monthly, and you need to pay that on time. This is to the state. The state will send you penalties. Uh, First of all, at the beginning, they will assess the taxes to you. They will send you a letter that you owe thousands of dollars because you have not declared. So this is for you, for you are forced to file the report that has not been filed. You are forced to do it with the objective of keeping you in check. So make sure that when you have all these obligations, you create your calendar, or you give this to your CPA, your tax preparer, to your accountant, and the accountant will file this on time. So you don't have to worry about only uh, doing the thing for your business, managing your business, and operating your business, not filing taxes and paying penalties for not filing.
Can cannabis businesses deduct expenses?
No. Remember, cannabis business is only able to deduct the cost of goods sold. Problem with that is, imagine all the other expenses for utilities, expenses for contractors. They are not able to for the deduction. So that creates a pressure for the cannabis business owner to be able to maximize or include in the um, cost of goods sold the expenses that are related to the cost of goods sold. This is, for example, for production, anything that is related to the production until the product is ready to be sold, that will be cost of goods sold. In the case of retail, wholesale and retail, anything that is sold at the cost level, that will be cost of goods sold. So if this is very atypical, because other businesses are allowed to deduct the cost of goods sold and the expenses, but cannabis is only expenses. So for tax planning purposes, for example, you need to be aware that you will have to calculate quarterly payments. This is for everyone. Quarterly payment for corporation, quarterly payment for S corporation, quarterly payment for LLCs, and quarterly payment for LLCs with one member. Either the company pays profits, the taxes over the profit, like corporations. You, as an individual, receive the profits from LLC and S corporations. Your payments of taxes will be larger, either for corporations or for individual point of view. They are going to be larger. So the larger the amount of taxes to pay, the larger the penalty for paying late, and the larger the penalty for not filing or filing late. This compounds, let's say, the taxes for the cannabis industry, because there's a larger portion of taxes or profit that are taxed.
How can I reduce my tax liability?
Tax liability is reduced uh, with proper plan. So proper planning starts from the moment that you plan, from the moment that you are thinking enter into the business. So if you want if you want to and if you want to not mix the profits of the company or that they do not reach you, you use a C corporation, and from the C corporation you pay all your expenses. Remember that those are 21%. Right now, companies are taxed at 21% profits. If you want these profits to hit you as an individual or or different partners, you need to consider what is your tax rate, your tax bracket. Tax brackets go from 10% to 37% depending on the level of income. This is where you need to be to sit with your CPA, with your tax planner, and do create a plan in anticipation of entering into the business. Otherwise, once you produce a profit, your business is profitable, you are going to be in a higher tax bracket that is going to hit you with a larger portion of tax payments. That is the genesis. That is the big where you need to sit and plan regarding your income. If you already are in a higher tax bracket, and you know it will be advisable that you do not receive those profits because that is going to put you in the highest tax bracket, then go with a C corporation that you have at 21%. Even though when you receive dividends, you're going to be taxed at 15%. So it all depends of the moment that you do the tax plan. You before entering into the tax plan, enter into the business, before entering into operation, before you need to sit with your CPA and create these scenarios of how the level of profits are going to create what will be the result of this level of profit into your tax bracket as an individual or into the C corporation or as a corporation.
Tell us about the importance to understand the federal and state laws.
Remember that the federal government federal government allows the reporting of non legal substances even before the states recognized the legality of the business. So before that, the different U.S. states recognize cannabis as a legal entity. The IRS allowed many the reporting of transactions of forbidden entities. This does or didn't mean, or this does not mean that the IRS or the federal government accepts or authorizes the the consumption and the production of cannabis related products, because the legislation pertains to each state. But the IRS had given at all times the ability to report any non-legal entity to report taxes with the only caveat that there is no expenses deductible. It is only the cost of goods sold that is deductible with the IRS. At the federal level, the federal laws, uh, they have not been accepted or ratified by the Supreme Court in this regard. But the states have accepted the production. Most of the states, 20 something states, have accepted the production and the retail selling at the retail level of cannabis. So at the state levels, laws are very important because the cannabis industry is very regulated, starting from the licensing that every cannabis producer and retailer needs. Licensing this will be for the production, licensing for the sale, reporting bank accounts related that are banks that are serving to the industry are also sending reports when required to the state. And finally, the state itself is requiring or is following up with the cannabis business with the objective of have them in compliance. So it's very simple. If you want to keep your license, comply with the state, comply with it, with filing your reports with the state, filing the sales tax with the state, paying your dues for your license, and taking only the expenses that are allowable with the IRS and the state. If you want to keep your license in good place, make sure that you talk to your bank representative and you let them know from the beginning what is the nature of your business and how the relationship can be always in good faith. Because at one point you were gonna need financing, the help of the bank to expand your business. So at that point, that is not the point when you need to talk to your bank. You need to talk to the banker from the beginning and always be clear. If you are in doubt of anything that about your bank account, do not guess. Call the banker. The bank is gonna help you. Every bank that are serving to the cannabis industry, they are very helpful, but make sure that you talk to your banker. And finally, you sit with your CPA. You keep your CPA always in check. Uh, that because of the nature of the industry, you need a plan, a tax plan that should start at the beginning of the business, not in the middle, not three quarters, but at the beginning, before all this is formed.
Risk
Okay.
mitigation strategies.
Okay. Part of those are the ones that I was explaining before. Um, Whenever there is risk, you what are the risks that a cannabis business will have? Like any other risk, you have the risk of an employee uh, or an employee in the case of a producer falls in your premises. You could get a lawsuit. You will need insurance. You will need working compensation. In a retail, that a client or an employee fall in the premise, you can get a lawsuit. So you need insurance. There will be a liability insurance. You need that working compensation as well. Also, there is there is the risk that the bank that you are working with will close your account because they don't want to serve that industry anymore. So make sure that you have at least two accounts. Or three accounts will be better. That you are banking three separate institutions to avoid the risk of being debanked, that you don't have a bank account anymore, and communicate, talk to your banker at all times instead of waiting for something to happen. Talk to your banker when you are planning to do something or you are something that needs to be covered with the bank, like expansion, like a loan, like a new line of business. For example, you are producing and now you want to go retail, or you are wholesaler and you go to a retail, make sure that you talk to your bank at all times. I remember one client, for example, he was talking to the banker and he retained us for auditing purposes, and then he went to the bank and say, "We have retained." Fund CPA, Fulton Abraham Sanchez as a CPA, and these are their recommendations regarding my business. And that was a good thing because the banker was very happy that he has this backup from our company. So make sure that you are dealing with professionals, not only the bankers who are professional, but also a good CPA firm who is um, keeping your peace, your peace of mind. You always keep that. That's a good thing to have.
How to choose the right CPA or outsourcing service.
The right CPA is the one who you call and he or she answers. The one who you text and he or she answers or they answer. The one that you email and they answer. Uh, that is the right CPA for you because you can go with because that CPA will have your back. That CPA will be there for you. So this is what I was explaining before. You have to have your CPA on check. If you dial, the CPA responds. If you text, the CPI replies. Because I was stressing very much that you communicate with your bank, that you reply to, that you file your reports on time. That's communication with the IRS and with the state. That you talk to your banker, and you communicate, you talk to you keep good communication with your bank. So it's all about the the speed of and the level of communication that your support, this is CPA, the banker, your employees, any consultant that you have is giving you. That is the right CPA for you. Obviously, in addition to that, experience in the industry, serving the industry, and protecting and making sure that the type of business that you have is matched to the experience of that
Let us know about the importance of having a CPA.
CPA. The importance of having a CPA is basically avoiding penalties, avoiding late filing penalty for late filings, for late payments of taxes. But it's mostly when you are receiving letters from the IRS. When you have that not nice surprise of receiving in the mail of a letter from the IRS or a letter from the state, usually clients and people panic. Having a good CPA that replies on time and is there if you call and you receive a reply the same day if you send an email with a letter from the IRS or a letter from the state, it only stresses the importance of having a
What are the benefits of accounting outsourcing?
CPA. It's basically taking away from the pressure or having your set of books close at the end of the month, reporting the sales tax on time, reporting payroll on time, filing taxes on time, and paying taxes on time. That is the benefit of having a good accounting firm for outsourcing purposes is all these requirements, all this compliance that is required by the IRS and by the state, that you have them out of your mind because another qualified and experienced mind with these reports will be able to help you and fulfill the obligations that your business has with these entities, IRS and the state. So those are the benefits.
The cannabis industry faces unique challenges in terms of tax compliance and planning. Using this video, you will be better prepared to manage your tax obligation and take advantage of planning opportunities. Having a specialized CPA and considering accounting outsourcing are strategies that can add significant value to your business. Fast CPA and consultants offer accounting services that can streamline your finances. Our remote accounting department provides cost saving and personalized service without needing in-house hires. Mail us at fa at fastcpaconsultants.com or call 305-33-3898 to schedule a conference call with our CPA and send us any questions. You can find this info in the description box. Thank you for watching, and thank you, Fulton, for sharing all this information. And see
That's
you
the
next
question.
time.
Thank you.